Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Thursday, July 15th. It is 7:51, and we're going to have a lot of very important Fed data coming out in about half an hour. Boy, oh boy, the plate is full today. We've got jobless claims. We've got the manufacturing activity. We've got the Empire State manufacturing activity. We've got import and export prices. And we have industrial production. And on top of that, we even have a little cherry on top with Jerome Powell speaking. Anyhow, yesterday's data shows that we are, according to Powell, inflation still temporary. And what is the meaning of transitory? But I'm going to tell you all the numbers that are coming out, and I'm not going to break them down for you because it's real simple. Inflationary pressure is at a 13-year high right now. It's not doing well, and hopefully it is transitory. But the big reports, jobless claims. If the number is below 400,000, I'm not going to nitpick because the number has been really good. The moving average is like 390 something. Now, let's take a quick look. Why not, right? We're already there. But basically, we're looking to see if manufacturing is picking up. See, there's the 4-week moving average, 394,000. The truth is, if it's anywhere near this, it's been really smooth. So even if it doesn't beat expectations, anywhere around the 4-week moving average, and we're good to go. Anything 400, 410,000, 350,000, it's been good. So we're not going to mess with it too much. But we are going to see import and export price data. We're going to see industrial production. So we'll get a really good idea of where manufacturing and production and whether there's an increase in prices in the manufacturing and the industrial production. And then Jerome Powell will talk a little bit about all of that. So that's going to happen today. All of that happens today. The big ones are obviously the jobless claims, the industrial, and the Philadelphia. But Empire State manufacturing and import-export prices are really important because it's going to give us a good understanding of where we stand from China in terms of inflation. Is inflation biting us from China? Are export prices that we have to pay higher as well, or is it just happening locally here in the U.S.? If I had to guess, it's both, but we'll get a good idea of that today. And tomorrow, folks, you have retail sales and consumer sentiment, which reflects a lot, like 2/3 on the GDP. So watch out for that data. Now, the big asset that you have to keep your eye out on today is the bond market. Notice the bond market is flirting with the 200-day moving average. I think it's gonna huff, it's gonna puff, it's gonna stay around this area, and then it's gonna break back down. Why? Because the Fed has already told us they're gonna back down on their time frame for lowering the stimulus or there's so many different ways of saying it. Lowering this, deflating the stimulus, giving us less aid, basically putting less money into the bond market and giving the market a chance to stand on its own. Earnings so far, they've been good, but the stocks have not reacted as positively as they did last quarter. That's because estimates are really high and because we don't know if COVID is going to hit us again. That Delta variant is not going away anytime soon. And I know what you're going to tell me. Statistically, it's just as bad as a flu, but it's still impacting the markets. And I think that's one of the reasons why the NASDAQ is still up, because it is grossly overbought. As you could see here, the NASDAQ is, as a matter of fact, if we look at the data right now, the Dow's down 168 points, NASDAQ's down a little bit. I think we may be having our first big down day in quite some time. We are definitely overdue for it. This market is grossly overbought. Let me just show you something crazy. This is the NASDAQ 100. Look at the Russell 2000 and look at where it is right now in comparison. Look at how flat. Notice it's breaking down. Look at MDY. Now remember, the MDY has the 400 large cap stocks, but not that last massive market cap. Flat. Look at that. But look at the NASDAQ 100. It's crazy. It's insanity. But also keep in mind, when you look at the NASDAQ 100, remember what I told you about momentum levels. Let me just show you this real quick because we're on the NASDAQ 100. Look at the indices right here. You've got 74% of stocks trading above the 50-day moving average, 81 above the 200-day moving average, and I believe this number will come down quite a bit. If you look at the composite NASDAQ, you will see, let me just show you this, only 41% of stocks are trading above the moving average. And that's huge. Think about it. NASDAQ Composite, 41% of stocks trading above the 50-day moving average. NASDAQ 100, the top 100 NASDAQ stocks, 74. So what you are seeing is an extreme concentration in a couple of large cap stocks like Apple, Amazon, Facebook that are distorting the NASDAQ 100. And in reality, the NASDAQ 100, without a couple of those stocks, folks, pay attention, this is really important, would look like the NASDAQ Composite does. And with the NASDAQ Composite, you're not even seeing the asset trading above the 50-day moving average. So if the NASDAQ looked like the NASDAQ Composite, it would look like this. Well, actually, why don't we just look at the NASDAQ Composite? Why even do that? You know, let me see if I can pull up a chart. This is what the NASDAQ should look like. Let me just show you what the NASDAQ 100 should look like. This is a real good representation of what the NASDAQ 100 should look like right now. Take a look at this. Not as high up, not as overinflated. Still up, but again, only 41% of stocks are trading above the 50-day moving average. So again, you have to be very, very, very cautious. Very, very cautious, because momentum levels are not our friends right now. Again, this is a very vulnerable market. And again, if you look at the difference, just look at this, 41%. And it's literally the same index, except one just has the biggest. 45% versus 74%. That 74% when the market dives is going to go back down so fast, you don't even know what'll hit you. So let's talk about global economy. Not a lot to talk about today. China's economy expanded at 18.3%. And the latest data showing growth slowed in the latest quarter, reflecting a leveling off on its relative early recovery and its pandemic. That's important because why? We get a lot of stuff from China. Remember all those parts and accessories you couldn't get on Amazon a year ago? That's because they're all made in China. All the components for iPad, iPhones, all that stuff, China, and more China. Investors are keeping an eye on the latest comments on inflation from the Federal Reserve, and boy, he's doing a lot of talking, which reaffirms the Fed's view that surge in costs across the economy is temporary. Yeah, well, tell me that a year and a half from now. I want to know what they define as temporary. Is it 10 years, 20 years, 30 years? What is temporary? Federal Reserve Jerome Powell suggested in his testimony yesterday that inflation will likely remain elevated. Oh, look at that. But eventually moderate, reinforcing the central bank's position that rising inflation is temporarily impact from the recovering economy. Again, I want to know what temporary is. And I think today, was it yesterday? I think yesterday he explained transitory. I'm going to have to, I guess we now have to look at dictionary books or look at special definitions to know what transitory means. The bottom line is, folks, inflation is here and it's high. Look, on that note, I've got a couple of stocks that shouldn't be impacted too much by what we're seeing right now. First one is Alkermes, ALKS, hitting to the 50-day line, moving from a swing high. And if you look at the profile of the stock, you will see it is biomed, pharmacy, not tech, shouldn't be impacted by higher or lower rates too much. And again, biotech is one of those things. Healthcare, you need whether economy is strong or weak, whether inflation is there or not. Next one, Switch. Now you're probably saying, Roger, you told us to stay away from tech stocks. I did, but this isn't really a tech stock. It's an infrastructure company, and it's not a big one. It's only worth about $5 billion. I'm actually surprised it's not in the Russell 2000. But this is a infrastructure company. It designs, constructs, and operates hyperscale data centers. And folks, data centers, as we get technologically more advanced, where do you think Zoom, Dell, Microsoft, Amazon keep all their servers? In REITs, that data center REITs. And this company, Switch, operates and scales data centers. And I think over the next couple of years, it's going to be a big winner. Look at earnings per share growth versus previous year, 100%. Earnings growth versus previous quarter, 33%. And most importantly, if you look at the price of the stock, you will see that we're pulling down to the 50-day moving average. And I love pullbacks from all-time highs when RSI is not overbought, and it's not right now, when it's hitting close to the 50-day moving average. And I've got something important for you. But pay attention to the reports that come out between 9:30 and actually 8:30 and 10 a.m. Eastern Time. They're going to be really important. The market's down right now, and if one thing is off, if employment is off, if anything is off, this market can really move. And it's really interesting because right now, good news, if the news is too good, it's interpreted negatively, and if the news is bearish, it's interpreted positively. So you really got to be careful and keep an eye on the market. And most of all, this is not a time to be a trend follower or buy and hold trader. This is a time to be nimble, really nimble. And that's why I've got something really important for you. We've all heard that buy and hold strategies are the surest way to make money in the stock market if you've got 30 years. But I'm here to tell you folks, it's just not true. Expert trader Adam Sarhan has spent more than 20 years in this business, and he's figured out a way, he's figured out what the big players use to be successful in the markets. It's just that simple. It all comes down to one thing: understanding human emotions, because human emotions is what drives the market. People have to step back once in a while and remove emotions from their decision-making process. What do I always tell you? Emotions in trading are your biggest enemy. This is incredibly important in trading. Your emotions are your worst friend. The goal of Alpha Trades Alert is to follow king markets on Wall Street and understand why they're doing what they're doing with their money. Adam hones in on the price and volume of their moves using data to identify the most promising trades. It's a systematic approach. Adam, 20 years of experience. He's managed money for some of the biggest players on Wall Street. Learn more about Adam's Alpha Trade Alerts and how they can transform your portfolio. Just click on the link below. Do it now. And as always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post new videos. And don't miss Adam Sarhan. This guy is really accurate. He's good. He's got his pulse on the market. And also, make sure you pay attention to this Fed data that's coming out today and how it impacts the bond market and how the bond market react. I'll talk to you guys later. Have a great day. Bye.